What is that one secret lesson that you've learned towards building a successful, scalable business? Say right from your glitch days or your chatterbox days.
Try something new. Don't be afraid to fail. It's okay. If it fails, it fails. You've learned, you still learned something. And don't be afraid that, hey, what if it doesn't work? It may not work. And that's why you're a founder, right? You will find another way to do this.
And what is the biggest deal that has happened on your platform till date?
Till date, we recently closed a deal which is probably upwards of 150 crores.
And what's the most surprising startup category you've seen listed on your platform?
When people list websites and Instagram pages for the first time, I was like, who is going to buy an Instagram page? But they got so many interests. They got knocking and they got offers on that front.
Are there any hot sectors that work really well in terms of acquisition?
Fintech has been another space, and consumer is an always-on process. Right? There will always be somebody who wants to buy something in the consumer space.
What are the top 3 mistakes startups make that stops them from making profits? Ever thought of selling your startup or buying one on a single platform? Well, today I have with me on my podcast Mr. Rohit Raj, who is the co-founder of Done Deal. It's a platform that connects investors, buyers, and agency owners. And it's a very interesting mix of the way how the platform has really come about. In today's episode, we're going to be, talking a lot about the leadership lessons of Rohit, what it means to build a successful and scalable platform which connects actually both these parties, which is your buyers and sellers. And more importantly, those pivotal moments in his journey of selling 2 successful startups that he's had, and now onto talking about the third one, which is Done Deal. So Rohit, very happy to have you on my show Breakthrough Moments with Priyanka Bhatt. It's a pleasure talking to you today about your entire entrepreneurial journey.
Thank you. Thanks for having me here.
Yes, Rohit, my first question would be that I know you've sold 2 companies. One is Chatterbox, which is a technology platform, and the other is Glitch, which is a creative agency. And now you're on to the third platform. So what's the plan with the way forward with building Done Deal now?
I mean, Done Deals stemmed from my journey in the past, right? So I've, having sold 2 companies, I've seen that, hey, there is what the outcome can do to a founder and how can we now democratize that outcome to more people is largely where we come from. Having had 2 successful startups, there were pieces that helped us on the way of building Glitch, on the way of building Chatterbox, and we said like, hey, how do we enable this for more and more founders? And that's largely the thesis where we were drawing out. Done Deal was one part of the idea where we said, hey, if one element being capital, can we start solving for capital? It's either capital to run the business or give a meaningful exit to founders.
Right.
How do we enable that? And today in the world of where bankers only touch a certain kind of companies above, we wanted to give that access to any sized companies, and that's where Done Deal's been.
Okay, interesting. So what got you to start all over again? Because you've already, sold 2 companies, and having the third one is no mean feat, right? And entrepreneurship itself is no mean feat. So what was the trigger that got you onto building the third company, the third venture?
I mean, ideally, I should have been sitting at a beach sipping mojitos.
Yeah.
But yeah, I keep saying that the third startup was more accidental. I mean, accidental in the sense that having sold, the day Chatterbox got acquired, a lot of people started reaching out saying, hey, you've been through this process multiple times. Tell us how we can do this. And I was talking to a bunch of founders, and I got talking to another friend of mine who's a banker who was wanting to jump into this space, Anish. And I was like, hey, there is so many people wanting to do this. And I think there should be a technological solution to this. With tech evolving, is there a way for more people? Anish thought that problem was interesting as well. It was almost like a brainstorm of sorts, or more like a fun engagement, which converted into Anish saying, this is it, we should try to solve for it. And Done Deal happened. So it's not like I sat there saying, okay, I need to now start a next startup and what should my idea be, etc. Okay. It was accidentally came across a problem which was a genuine problem and found a partner who believed in the problem equally and then
Yeah. So
came on
tell us
top.
a little bit about what were the pain points that you saw in the M&A space
Yeah.
that made you decide to build a platform like this, which connects investors on one side and on the other hand, brands or agency owners.
So, I mean, acquisition, if I look at it as a word, is I don't know if a lot of founders come out with thinking of acquisition in their heads, right? So, like when we were building Glitch, I don't know if an exit was an option or it was in our heads. We never realized that that could be an outcome. And probably because that time the conversation is not in this space, till one day somebody came knocking on our door and said, "Hey, would you be looking to get acquired?" Uh, we started looking at it from a different lens, and then that's when we understood the process. We were helped by bankers in the whole journey of it, and that was a great outcome that we finally achieved with Glitch. Now, having done that, suddenly when we started building Chatterbox, we looked at Chatterbox with a point of saying that, okay, how do we now plan for an exit? And we got to that point because having the experience of exited before. Today, more and more founders, when I look at it, they don't know when is a good time to sell, what is the right value for them to sell. These are the kind of questions they have in their heads. Or should I even sell or not? Right? Can I help you answer these questions? And that's where bankers generally come in and help understand this. And then who do I sell to? These
Yeah.
are the things. So bankers keep helping you with this, but bankers only touch you when you're a certain size and above.
Yeah.
In this world of technology, I think tech could play a role, and that's where we came from, saying, can we build software that can help answer these pieces faster and get somebody to transact faster?
Yeah.
Same way, from a buyer point of view, what we noticed was, for the longest time, if you look at acquisitions in India, has always been the big players, right? So the Tatas, the Birlas, that's where you've seen the buying happening, or much larger companies on that front. But why? What stops me, a smaller, whatever, I might be a Series A startup, right? But can I now accelerate my growth through acquisitions?
Yeah.
I wish I could, but where do I find these guys? I don't have an option because bankers are not going to, if I want a company in the, whatever, 5-10 crore range, bankers are not going to come and present because there's a lot of work to build this.
Yeah.
But with tech, we're able to solve for that, right? Help this
Right.
discovery. So we said
Right.
that is the space that we saw, and that's the space we're building in.
Awesome. Yeah. So, what is that one secret lesson that you've learned towards building a successful, scalable business? Say, right from your glitch days or your chatterbox days.
My favorite lesson is don't be afraid to make a mistake. I've said this too many times across all my journeys, but that's we've been as a founder. I think you have to be fearless. It's okay, it's great to. We used to say this at Glitch, saying, "Where's your will to make a mistake?" So try something new. Don't be afraid to fail. It's okay if it fails, it fails. You've still learned something. So we've always tried, because if I try to solve a problem the way it is being solved, then you are just going to be run of the mill. Try to attempt it a different way. There is a chance, and don't be afraid that, hey, what if it doesn't work? It may not work, and that's why you're a founder, right?
Yeah.
You will find another way to do this. But
Yeah.
by doing that, you get a whole different perspective, and
Yeah.
you unlock a whole. Because a lot of people, like at Dundee, when we started, a lot of people turned around and told us that it's too small a TAM. How many acquisitions happen in India? Do you want to be attending this kind of a problem? It's too small.
Yeah.
But if you look at it, it's small today, and I think over time we are seeing that time growing, right? It's
Yeah.
also small because nobody had the opportunity to acquire.
Yeah.
Today I've shown there is a company on our platform who's never acquired before, came on board, has made 4 acquisitions through us. So
Yeah.
suddenly we're opening up this world. So you
Yeah.
have to make that attempt.
Yeah.
Don't be afraid to fail. Because if I said, oh, okay, this might fail, we may not have started again. So
Right. So tell us a little bit about what can an investor benefit? How can an investor benefit, and how can a brand benefit on your platform? What are the things both these parties can benefit from each other by being on your platform?
So I'll start from the buyer side of things, right?
Yeah.
Which is the investor, the strategic investor, as I call it.
Yeah.
How we see them benefit is that one, in the acquisition space. So we help you enable an acquisition. So in the buy versus build scenario, we have been advocating the buy side of things, right? So why do you want to build something that already exists when you can buy it and accelerate your growth? So you could be a company. I'll take your example. You're in the PR space of things, right?
Yeah.
And you're suddenly seeing that, hey, look, content's doing a big thing. Do I start building a content team from scratch today, which can shoot my podcast, we can shoot, or can I pick up a company, say within a 50 lakh, 1 crore range, and which already has existing clients, and plug it into my this thing, and I know I already have 20 other clients. I open that, I can see. So that difference is that you will be able to do this by in the next few weeks, whereas you set up a team to do that, get the learning, etc., is a much longer
Takes
process.
time.
So can we now enable this for everybody? This is exactly the theory of acquisition, why companies have been doing this for. So for the larger companies, they always have bankers who come, okay, you tell me what you're looking for, let me find you. They give you pitch decks and this and that. For the smaller guys, nobody's helping that on this. So that's where we come into play. So you as an investor come to us and you tell us that, hey, look, this is what I'm looking to buy at the moment. That gives us a indication of, you tell us the range of what you're trying to buy, what is the price point and stuff. We give you ready to transact deals, which are there already on our platform, immediately match. So within a matter of a few minutes, that matching is done. Outside of the ones that are on the platform, there is also, we landscape the environment and tell you, here are 30 other companies which fit your brief perfectly.
Yeah.
So you can then choose to express interest, get talking to them, and then find a quick buy. So that solves the problem for the buyer.
Correct.
From a seller standpoint, it is a lot of founders. See, the thing is, the mistake a lot of people make is they'll explore an acquisition towards the fag end of their journey. Okay, so they look at it saying founder fatigue is set in, runway is running out, no money. That's when we have to look for an exit, and we try to solve for that earlier, saying that come be on the platform. What happens is the best time to sell is when you are not looking to sell, right? You've come on the platform, you're here, and suddenly there's somebody who's discovered you and said like, hey, would you be open to sell? I'm like, I'm doing well. I could sell because it fits the thing, and then you guys talk and your value is much, much better. So we help companies explore the option anonymously, because you don't want to be out there saying that, hey, I'm looking to sell. There on the platform, we're able to match make better. So that's the enabling factor.
Yeah. And is there any threshold? Like what I'm trying to understand is a benchmark in terms of what the company should be doing in terms of revenues, whether it's an investor investing or buying the company for an X crore rupees or a startup listing the platform. Is there a threshold that, okay, it can be a few lakhs to a crore, or it can be, is there a threshold?
No,
like
for
that?
a seller, we don't put a barrier
Okay.
for entry at all. So you can be, I mean, you could be a non-revenue company, but you've built solid IP around something, right? So there is, if somebody can see value in you for what you have built, we want to be able to enable a meaningful conversation on the side. From a buyer point of view, we have checks and balances in place to ensure that this is an authentic buyer. So does this person, because there's no point in me trying to connect somebody with you to buy your company without knowing that, hey, do they have intent? Do they have the appetite to buy this, right? So there's no point in me trying to connect a 10 crore revenue company to a 100 crore valuation company, right?
Correct.
Because there's no appetite to buy.
Yeah.
So that's something, this is where our systems are able to come into play.
Yeah.
We're able to dig through this data, understand multiple data points to figure out who sits where is the intent, where is the appetite, and then do the matching for people.
Awesome. And what sort of commissions does your platform take in order for the transaction, when the transaction happens? What sort of commissions
So
go to that deal?
we've kind of got a stepped commission process. So it's between 3 to 5%, depending on the size of the deal. So if a deal size is upwards of 100 crores, it's 3%. If the deal is between 50 and 100 crores, it's about 4%. And sub 50 crores is 5%.
Okay, so you have those bands in place.
Yeah.
Already. Okay, and who is this platform for? Is it we were mentioning, like when we were talking, you did mention it for founders, for investors, for any agency owners. Anybody else who can list on your platform as well?
We're size agnostic, we're sector agnostic, right?
Okay.
So it's open for everybody.
Okay.
We have seen individuals list pages that they built, so
Oh,
communities that they run on the
okay.
platform. So we've seen that as well.
Okay.
So it's a smaller set, but then we've also seen startups of different sizes
Okay.
come and list. So we're size and sector agnostic
Got
on
it.
that front. And whatever you're looking for, we enable both fundraise and M&A. So that's the advantage. We opened up fundraise very recently because the platform lent itself for fundraise as well. And that's something that, so there our proposition is very different, right? So where we turn around and say that fundraising is a very time consuming process, right? And it's a super distracting process. I went through this
Yeah.
twice. I've seen this where instead of building your thing, you're building decks, you're trying to
Yeah.
write to cold email 20 people, etc. So we
Yeah.
said, can we enable meaningful, high intent conversations only for you? So
Yeah.
which means you come in saying that, hey, I'm looking for a fundraise and my pitch deck's here. It's shared with all the investors on the platform. The right investors unlock, read the pitch deck, and then express interest. Which means if there are 100 investors and there are only 5 people have expressed interest in you, these 5 are actually genuinely interested. So you're already coming into
Yeah.
the call with them where there is a 30% interest in thing.
Yeah.
Now for you to close the remaining 70, as opposed
Understood.
to you talking to 100 people and realizing it's not their theses and so
Right.
on and so on.
So, from the investor's point of view, is there like a platform fee that they have to give
No.
in order
So
to be
at
on
the
the
moment,
platform?
we're absolutely free for buyers and investors. We
Okay.
don't charge them a fee at all
Okay.
because we kind of help them. The systems kind of opened up fully free for them.
Right. And in the early days, to build such a platform, obviously you would need the sort of trust from
Yeah.
from your ecosystem and stakeholders, whether and there would be a lot of questions whether this platform would really work. So how did you kind of build that trust and I would say proof of concept,
Got it.
right, to get your first say 10 people on the platform?
Yeah, I mean that's a great question because we've tried to answer that with this thing. I think the largest for us the core factor has been founder market fit, and that's what we think was the reason why we got the first set of people. So between me, Anish, and Ankur, my other two co-founders, Anish comes from proper investment banking. Anish was with KKR. He was with Kotak before that. And stuff. So he's done the thing and he's got his realm of connects in the ecosystem. And he also comes from a pedigree of IIM Bangalore. So there's a alumni network there.
Okay.
Ankur's IIT Kanpur, Ankur's build was with Dot Pay and was with Cast24. So he's come with that experience.
Yeah.
I've been entrenched in the startup ecosystem for a while, having sold to companies who have done an exit. So there's some value attached to that, this thing.
Yeah.
I've been an active angel for the last few years before we started. So
Yeah.
been entrenched in this ecosystem. So when we said we are starting this off and we launched with our MVP was a type form. Right. So, I mean, we just use Typeform because it's better design and not Google Form. That's about it. And on the day of us announcing that we were there, we had about 100 people sign up. So it was
Wow.
either us, I mean, we keep saying that is it people who are just trying to see what they are building, so fill the form out order, but we still got 100 sign-ups on day
Wow.
one. We managed to also close our first transaction pretty
Yeah.
quickly there on this one.
Oh,
So
wow.
it was, so if you ask me how much of it was the system to do, there was no system, right? So it was people who signed up, people who were friends, we knew people. So it was all literally the first 3 months was on WhatsApp. I was sharing something, and then people
So
were
it was more of
replying.
networking and your equity, personal equity,
Yes.
and the kind of work you all had done that
Yes.
led you to that sort of success.
That was the moat that we had there.
Understood. And what was the first deal like? What was the first successful deal that you locked in with the platform?
The first successful deal, also luckily, Touchwood for us was one of our was very popular as a brand. So this was fresh off the hooks of Shark Tank. Flatheads was there on our system. Flatheads was a popular name. It was a sneaker company coming out of India, and on Shark Tank they were praised quite a bit. So that was a big thing there. So when Ganesh signed up, and he also happens to be batchmates with Anish from IIM. So that's the people connect I was talking. So he came on board, and then we did like a landscape. We were searching. So initially, there were no platforms. Everything was WhatsApp driven. So we found some cold emails. A bunch of people reached out, showed them this, and that deal went through. And
Right.
the fact that when we announced the deal, I think it was a month into us announcing done deal itself. And it being Flatheads as the first deal announcement also gave us a bigger spike. So there
Yeah.
were a lot of right place, right time
Sort
things
of a
happened
thing.
for us in the chart. So
Right. And what is the biggest deal that has happened on your platform till date?
till date, we recently closed a deal which is probably upwards of 150 crores.
Can you talk a little bit about that
It's
and how
not
that
out in the
happened?
public domain yet. So
Okay.
what I briefly give you this thing. We announced it because it's being done in tranches. So the first bit was done, which is it's a in the beauty and personal beauty space. Uh, got again came on the platform. They was a very it was bootstrapped company, but growing really really fast.
Okay.
Obviously, when a company is that popular, doing well, had multiple conversations across the board, found one which had the best synergy,
Okay.
and they got going, and then the deal went
Awesome.
through. So I wish I could give you a few more details, maybe next
Maybe
season.
offline.
Yes.
Since you spoke about synergy, what kind of synergies do buyers and sellers look at when they kind of do the deal? Are they in terms of say mindset, in terms of personality, in terms of growth, or is it just restricted to say revenues and how the company is performing?
No, I think it's a mix of a lot of things. So again, depends on who is selling, who is buying, and what are your reasons for selling. Right? Let's look at that. So there are some people who are, hey, we're a business, we're doing very well, but now we know that I'm doing well. I will go to a certain level, but if I attach myself to a larger ship, we will do phenomenally well and we will outgrow this thing. So then it becomes we have to find the right strategic partner who either has the ability either doesn't have the ability that I have or the capability that I have, which is a great add-on, but they will also give me 20 other things for me to boost this thing. So that becomes one set of things. So Glitch when we sold was exactly that, right? We didn't technically did we need capital, etc. We were a very profitable high growth company at that point, but we also realized that could we have become the scale that we did without a larger ship attaching itself. So the day WPP came on board, suddenly we were no longer a Bombay, Delhi, Bangalore agency, right? So
Yeah,
suddenly we had exposure globally
globally.
and
Yeah.
stuff like that. So that's something that we could enable. Then comes the second aspect comes in saying that, hey, I'm selling because there's no other, I need to look at an outcome. Then that becomes very like revenue, multiple,
Yeah.
this thing kind of a thing. One common factor between the two is always going to be the culture match of sorts. Because if you want me to, as a founder, if I want to now, after I sell, want to go back to work in a space, that culture has to match. Right?
Yeah.
Because if I'm not excited about work on a Monday, I'm not going to be this thing. So both parties need to know that thing. So that
Yeah.
culture matching is the third
Yeah.
aspect, equally important
Yeah.
as revenue.
And what are the types of deals that have happened? Is it like what I'm trying to understand is it like buyers have looked at complete acquisition or do they look at part acquisition, majority stake, minority stake? What are the type of deals that have happened on your platform?
We've enabled all kinds of deals. So I'll give you how deals generally work, right? So one is the straight up
Yeah.
100% buyout, right? I'll buy the company out and pay you monetary cash.
Yeah.
Then there could be cash or plus stock as an option.
Yeah.
The most number of deals that we see are far more structured. It's not 100% on day one. It's broken down into tranches, right? So sometimes what they say is, and it depends on both sides of the party. So if the seller, for example, if I'm very excited about what I'm building today, I will not sell 100%. I'll be like, why don't you buy 51%? Right? So it now protects my downside. I've gotten certain amount of cash for my 51%. But now what you've done is you also attached your mothership to me, and now I get access to 20 other things.
Yeah.
So I can increase the value of my remaining 49%. How deals happen is that it always is a multiple it's a multiple on revenue, on EBITDA, etc. on that front. So let's assume I'm a 10 crore company and you've given me a 3x multiple. So I'm a 30 crore valuation. You've paid me 15 crores and bought 50% on day one. Now, next year, because I'm with you, my revenue has gone from 10 to 15 crores, right? So suddenly my valuation is 3 times of that, which is 45 crores. Now I sell 10% of that for this month. The year after that, it's even higher. So I can stagger my earnout. Same way, the buyer will also plan it saying that I want the founders invested in this because it's a founder driven business. I want them invested in this for a longer period. So deals could be either 100% buyout on day one, or it could be structured. The most number of deals are structured as
Got
in
it.
tranches because both sides want to have a
Understood.
say much
Understood. And
better.
do you have like a consultation fee for these add-on services for the companies who are listed on your
So
platform?
we are a flat success based fee only. Anything else? So for example, if you want a legal partner and you don't have one, we will only connect you with the right one. You pay
Okay.
them separately. That's
Okay.
it's not a thing that, so anything that we do is part of our success fee. So we don't charge you anything for
Okay.
that additionally.
Got it. And how many startups and how many buyers are there on the platform? Like, I mean, how many companies,
So we
agents?
are way upwards of 1,000 plus startups now on the system,
Okay.
exploring different forms of capital.
Okay.
And from a buyer point of view, like mandated buyers who are there who are like looking actively, will be about 400, 500-ish buyers. But today what happens is when you come into the platform, you come in and then there are people on the platform, there are people off the platform as well, right? And
Yeah.
our systems are enabled. You don't have to technically sign into this thing. You
Yeah.
can, but even if you don't sign in, we'll find you. We'll make sure the
Understood.
deal gets to you.
Right. And how many deals have closed so far on your platform?
So last year we did about 15 deals.
15.
15 deals. That's the number we
And
closed.
what was the revenue of those deals? That average revenue?
Our average ticket size for a deal is about $2 million. So about 16 crores is the size of the transaction on an average
Okay.
for the 15 deals that we closed.
Okay. And as a platform, how much revenue do you guys generate year on year? As a platform like Done Deal, how much revenue do you generate year on year?
I mean, we technically charge a commission on the
Yeah.
deal, right?
Yeah.
So we're not a SaaS platform to have like a monthly ARR,
Yeah.
MRR system. It's on success at the moment. We are still in that process. I don't think we have enough data to say this is the average. This thing we're only a year and a half old, so we just closed
Yeah.
actually one financial year where we've kind of fully closed.
Right.
But yeah, 15 deals is where we've closed last year. We're on track this year to hopefully double that number.
Okay.
And we will see. See, the thing is, today for us, like I said earlier, the moat is to bring, like, we're kind of building this category, right?
Yeah.
Acquisition as a category existed, but mid market or micro market acquisition, which is the 0 to 30 crore, 0 to 50 crore acquisition, which didn't exist, is what we are trying to build in.
Yeah.
That is where our magic will unfold.
Right. And can investors track the performance of startups before they even make a commitment? Is there a way they can track the performance of different companies on the platform?
So there are two answers to this. One, I mean, that's a feature we launched recently where when you're evaluating a company, right, a lot of times you're like, hey, you're too early for me. So what you end up doing is you pass on the deal. Now we have given the option of saying that track as a this thing. So instead, don't pass the company. It's an exciting space, but these are too early in my thesis. So I can track, which then means that every quarter or every 2 quarters, like for example, when we were raising, we had faced a bunch of rejections saying that not at this moment because you're pre-seed, you're not even revenue. When you cross a point, let us know. Now, as a founder, that's not, I sometimes miss that I should send the investor update to people who said this also. Here, by saying track, we are able to understand who's there, and then every quarter kind of tell them that, hey, look, you were looking in BPC. Here is a company that's grown 40% year on year. Now we're building further tools to say that can it trigger auto emails saying
Yeah.
that here is a company that we are seeing which is a standout, right? In the last 4 quarters, they have grown 40% month on month. Their revenues have what they projected versus what they've achieved is way higher, etc.
Yeah.
And you should definitely look at this company.
So
this
your
is,
platform gives you that data, those data points to the buyers and the
yes,
sellers,
yes.
right? Mainly to
So
the buyers
it's-
if they want to acquire a company.
Today, what is happening? Okay, there are pieces that is there today in the platform. There are pieces that will get added. Today we are asking you to enable, you are putting your numbers in when you sign up, right? Now, how do I get an updated number unless you enter this? So we are now building out tech to be able to track every company and kind of update their numbers quarter on quarter through uh, whatever
And
proprietary
that's like a new
learning.
feature you're
That's
adding.
something that we have been working on actively to
Yeah.
enable. So that
Right.
once that is done, it's almost, I mean, think of it like this, right? So you connect your whatever Shopify or Tally, etc., with me, which means that I will be able to build out your own MIS and update it real time. That is the dream scenario to be in, where tomorrow when I look at a company I to buy, I know their numbers as of yesterday, which means decisions quicker.
Yeah.
The diligence is quicker. So these are authenticated, verified numbers that I can pull in.
Right.
It's not there yet. We're still working to build.
Yeah, but that will be, I think, an interesting feature
It
to
is,
add
yeah.
on because it gives more visibility to
It does.
buyers as well when they're looking at acquisition. Are there any hot sectors that work really well in terms of acquisition?
I mean, where have we seen activity? Fintech's a great space. We've seen a lot of activity in the media content space. I mean, we don't know if that's a skewed data point, because for the longest time, a lot of companies, because of our founder outreach that we had, was very media and this thing driven. And also look at it saying that this is an audience which you will not find a non-profitable media company, right? It's agency, they're always going to be profitable. And there are people who are buyers who, again, know real bankers in that space.
Yeah.
So we are able to do this thing. So media has been a very crucial part for us. Fintech has been another space, and consumer is an always-on process. Right?
Yeah.
There will always be somebody who wants to buy something in the consumer space. So so these are three segments that we've seen activity.
Got it. And what sort of due diligence do you guys do at your end before you actually get the sellers and the buyers listed on your platform?
So from a buyer point of view, we've been very, very this thing, because a seller's trusting us with a lot of data, right?
Yeah.
So I want to not have a random person who's not got there. So a buyer actually goes through a KYC process literally when they sign up, of getting onto a call with some of us before they're even given access to the platform per
Yeah.
se. From a seller point of view, it's the info that they put in. System is able to today flag off when something doesn't add up. So, for example, if you've signed up and you say your revenue is 150 crores,
Yeah.
we are able to pull in your revenue for the last two audited numbers that you've put with MCA. So that number, and this, if you're saying that you're 150 crores, but last year was only 1 crore and the year before that was 50 lakhs, you couldn't have grown 150x. If you have, then it's a magical story. So it flags it off. So one of us will reach out saying that, hey,
Right.
we want to confirm, did you put a zero extra by mistake, and so on and so forth. So that's
Yeah.
the basic level of diligencing that happens when you sign up. Once the two are matched, then of course there's a certain amount of data that comes in from the seller,
Yeah.
which is mostly then going to be scrutinized by diligence teams per se. We
Yeah.
haven't gotten down yet into building so we've been the whole quadrant of M&A, right? So there's discovery, then there's matchmaking, then there's this thing, then structuring, then diligence, and then so in that we are still heavily solving the first part, which is the discovery part. Everywhere else, it's still very human
Got
driven.
it.
We will slowly be adding tools into it, but it's such a vast environment to solve for
Yeah.
in the first part itself. With so many data points, is what we are
Correct. Awesome. Are there any scams that you've seen on your platform, like say a fake balance sheet by a seller or any such scams that you've
I mean, we've
witnessed?
been super lucky, touch wood. We've
Okay.
not seen any of those. I mean, we're working with a lot of startups, right, and founders. I will give the benefit of doubt saying that most of them are. Everybody wants to. This will never be their last journey, so they don't want to be called the
Yeah.
guy who
Yeah.
fraudulently made it. I don't know. I have not seen them yet on our
Right.
system, so we've been lucky that way.
Yeah. And how do you cut M&A timelines, say from 12 months to 60 days? How do you do
I
that?
think one of our biggest thing has been the discovery aspect. So how a regular banker ecosystem works, right? Is you come on board, then they build out a pitch deck, and then they build out the models, and then they go out to look for it. That entire process is a 5 to 6 month, 4 to 5 month process minimum that they get in. We shorten that full process to as short as like 1 or 2 days, right? Where we're able to match you with the right people on platform and off platform and do a reach.
Yeah.
Worst case, 1 week, right? Because if the on off platform is a wider thing, we have to there might be follow ups needed. Etc. So within 1 week, the system is able to push the company's anonymous profile to get a cold yes or a no kind of a thing from them.
Yeah.
That alone has wiped out a large chunk of things.
Right.
Then the conversations that you end up doing post that are very more high intent conversations, right? So maybe you can come on the platform and you'll be like, you told me there are 180 matches, but only 3 interests have come. But the point is that these 3 are you're most likely to close intent because the others have not really shown the thing. So we are able to move that needle faster. And that's where the thing is. Diligence, etc., does take time. Over time, I think we'll automate a bunch of things. Like our data room, which is which is a time-consuming process for founders. When I ask them, okay, we need to send data, most founders are so busy building what they're building, they don't have access to 20 other documents that you've got. So can I now automate those pieces, etc.? Something that we'll build and add.
Got it. Understood. Are there any features, say, startups have asked you to add onto the platform, and which has actually worked in making deals even more successful?
I think the biggest question that we've always had is valuation. Right? How do I value a company?
Yeah.
What is the way? So when we launched Dundee, we launched with a valuation calculator. Right? Now that was the 1.0 version of it. Then now today we have so much data of startups signing up, deals going through, etc. We've been able to keep fluctuating that and make that better. We are able to, so a tool which is able to tell them what is the right pricing to go with for you. So now, for example, we want to add in, that's a piece that teams are working very drastically on, which is to turn around and say, how do we make this smarter and smarter? Soon you'll see a much better version of this. Today also we have a valuation report that comes and says, in your industry, these are the multiples that exist.
Correct.
So if you say you are 10 crore EBITDA, and you can get up from anything from 6 to 10x as a valuation, right? Because you don't have any IP, you technically will be 8x. So middle one.
And that depends on the industry also.
Yeah.
Like education, for example, I know somebody had mentioned 8 to 10x you get, say, if you're
Not
selling
anymore,
off in education. Yeah.
Depends. Again, like you said, it all depends on supply and demand, right? And we are able to give you that. That's like, for example, I'm sitting on both sides of the part. So I know that 18 people today are looking to buy something in the AI thing for content generation, right?
Yeah.
Now, if there are 18 buyers and only 3 sellers, your low supply, high demand, you can now increase the multiple automatically.
Yeah.
So think of it like a private market, stock market, where
Yeah.
we'll be able to then this thing and fluctuate and tell you the pricing.
Yeah, got it.
So that's something
Interesting.
that's the
Yeah,
interesting
and
thing.
what is how is your platform different from other listing platforms? Are there even listing platforms like you who solve for the micro to mid market range?
In India, we are no longer just a listing platform. So I think that's a pivot that we have also made. We started off being a marketplace where you can come, it's a listing thing. Today, we're moving from a marketplace to we've built software which is strong enough to enable a deal to go through faster. So what we've now become is no longer just a marketplace where 2 companies will come and they'll find you and they'll add you and this thing. There is also more of an outreach. So think of us as a smarter banking solution, right? And that's where we've kind of built it. Are there listing platforms? There have been a bunch of listing this ones, not specifically working on the startup domain, more for MSMEs, etc. on that front. There's one called Synergies on this. In the international markets, there's acquire.com, which is the first one who did this.
Yeah.
But again, there are in the US, it's a very different market. Acquisition is in their DNA. Everybody, even like somebody makes an app for on the App Play Store, he can find a buyer over time.
Yeah.
It's a very acquisition friendly market. We are not that. So we've learned a few things, which is why that whole pivot from saying, should we be a marketplace which is a self-serve, where a buyer will come, look, search, find, or should we be a smarter investment bank? Because we built a great software around all of this, right? The matchmaking for us is extremely so many data points to do this matchmaking. Can we now enable all of this and reach out to more people? That's what we're trying to do. Right?
Right. And how will the pricing work? In the sense, I know right now you don't have your revenue model is completely free for both the buyers and the sellers on the platform.
No, it's free in
For
the sense,
listing them.
Yes, listing is not.
For listing is free, right? So what are the other revenue models you're looking at to expand your business?
See, today at this point, we're still sticking to our success fee model. Over time, I mean, we have thought about saying, should we charge a subscription fee for buyers to be there, etc. At some point, I think that's where you'll have to draw out so many permutation combination to figure, okay, like, what is that the value unlock, or is it the fact because if I deter you from coming on board because you don't want to pay the subscription or whatever,
Yeah.
do I lose you as a buyer who could potentially have bought this company, and I will always make a much, much higher. Like if I sell a company for 10 crores, I make 50 lakhs in that deal straight up.
Got it.
Right. So do I kill the golden goose? Is the question. So that's something that we've had to debate on. At the moment, we're still sticking with our
Right, the commission-based structure. Right. And what would be a 3-step formula for deciding pricing for products and services on your platform? Is there a formula in terms of thinking of what sort of revenue models would work before you decide that pricing structure?
Before we got to this thing. No, so we drew out all the ways we could have made money, right? So where could we have made money? We could have made money through success, through charging a subscription fee, then adding add-on services, right? Like for example, so we've looked at each of those elements. Like tomorrow, do I then give them a service like legal this thing? Can I then give that? End of the day, all of this had to lead to success, and that is where so the joy for a customer today, when you have 10 crores in your bank, you're so happy to give me 50 lakhs just because I enabled the 10 crores
transaction.
To you, right? So let me first bring in the NPS and the joy. Then tomorrow, if you need, if I can give if somebody else is doing a better job than me, I don't want to get into that field, right? So I don't know if I'm the right legal person to give you. Do I want to in-house a legal team and pay them this thing and keep them there? Or do I find you the best lawyer who can probably give me a better pricing for you? That's what I will enable. So we thought about all of those pieces. It's a never, I mean, as a founder, you never say no, right? To revenue on that.
Yeah, but you don't charge a commission on that, right? If, say, for example, if a company wants a good lawyer,
no,
you don't charge any commission on that.
I will only connect you with the right partners. What we are trying to enable is, again, I want this deal to go.
Yeah.
Right? I want to make sure that you close this deal. So let me get you a lawyer cheaper than you could have. If you went to a legal firm, you would have been paying X amount. The same legal firm through us would have been giving you a discounted thing because they've done these deals before through us. So
Yeah. And can a user cancel or exit midway while he's listing his startup, say, on your platform? Can they just exit midway?
You're free to delete, remove yourself, delist yourself at any given point. But if I have introduced you to a bio, and even if you delist yourself, if you go ahead and close your deal with that buyer that I introduced you to, you are still eligible to pay me a fee.
Okay.
So that's how we've kind of structured it. I mean, be fair about it. It's like, I don't want you to get introduced to somebody and then delete the account. Absolutely. Because I've already ho gaya, wo matchmaking मैंने बनाया है. So then
correct. Right. And what's the most surprising startup category you've seen listed on your platform?
Most surprising?
Yeah. Is there like a category which you felt would never work, but it's actually worked on your platform, and there was a successful deal that happened on your platform?
I mean, very honestly, when people list websites and Instagram pages for the first time, I was like, who is going to buy an Instagram page? Was my larger question.
You mean like an influencer listing the page?
Yeah, I mean, like if you've built out a community, right? Of let's assume like somebody's built out a community of mothers was thing, and that community has grown. But like I was like, who? What, I genuinely didn't see
Oh
this
wow.
kind of a thing, but they got so many interests. They got talking and they got offers on that front. So that was a surprising aspect. So
Yeah.
I genuinely didn't think that a community or a Instagram page in itself, like somebody with 3 million followers on a page, which is a page that's talking about travel and this and that. There is people
Wow.
who want to pick that up. So I'm like,
Yeah,
I
that's
was in.
interesting.
Yes.
That's an interesting thing. Yeah. Rohit, I'd love to ask you, what are the top three mistakes startups make uh, that stops them from making profits?
Ooh. Stops them from making profits.
Yeah.
I think sometimes you, as a startup, you start kind of chasing vanity metrics, right? And then in the attempt to chase those vanity metrics, and you set these aggressive goals, and a business, end of the day, is a business because you're here to make money. Now, you chase vanity metrics of saying ki itna, this is the kind of uh, customers we have and so much of revenue, etc. You can, I mean, tomorrow if you start offering these crazy discounts on things, people will come anyway, right? If I'm giving something for free, then I can get 300 customers in. I can show you that 300 people bought my product for this thing. So, in chasing of these vanity metrics, I've seen a lot of people chasing aggressive growth because they think that that is the only way for them to
So
get there.
unrealistic numbers, you
Yeah,
could say.
without really hitting product market fit. Right, so it's see, one thing when you know that, hey, I've made a great product and people want it. If people want it, they will pay for it. Right? But you can't tell me that people want it because you're literally giving it away at 60% cheaper than your
Yeah.
closest competition. So that's where a lot of people end up making uh, losing a lot of money. Uh, then, of course, hiring wrong is a thing. That's, you end up, when I think Ashish Hemrajani said, somebody said this, where he said, in India or globally, if you look at it, very few startups die of starvation, more people die of obesity, like more startups. And it's because sometimes you raise so much money and you're like, oh, I have so much and I don't know what to do, so I will
Yeah.
get the fancier office and I
Yeah.
get more people. And what could have been done by a job that could be done by one is now the 10 people, and 10 people with no structure.
Right.
So without a plan in place, that's the,
Right.
so
Right. And what has been your biggest failure or rejection while you were building Dundee?
my biggest failure, I mean, we're still early days. There have been so many things we've tried which have not gone right, and that's the best part. So where you throw darts in every direction as a founder. Right? The zero
Yeah.
to one journey, I think for me, any company in the zero to one journey is about making sure that you have enough failures that
Yeah.
give you learnings. We've had, I mean, when we were fundraising, we've had our share of rejections, right? We've heard everything from saying, this is not the time, you are not the right person to get into this, or of that sort. We have seen, as we built, for example, I was telling you earlier, we built like a marketplace where we were very confident ki, like, buyers will want to come there and search. And now we've learned that I don't know if buyers have the patience to come and search, etc., because they're used to being catered to. So
Yeah.
keeping all of this in mind, the thing is, it's not about failing, it's failing fast and learning quickly and adapting. And that's something that luckily we've been able to do so far. And I hopefully want to continue doing.
Continue doing that. Awesome. What's one thing you did differently from day one, say compared to your other ventures with Glitch or Chatterbox while you were building Dundee?
I mean, at Glitch, though, we didn't even have a business plan, right? So, again, accidental entrepreneurs is the exact word. So, Varun and I were working in Channel V together. We were batchmates from Simbi, we were best friends, flatmates, all of that. So, we just one day decided to move. The story we can say today is that, hey, we knew why we quit Channel V, because we probably did not enjoy the direction that they were taking. So they stopped playing music. They were going into a very GC central. Their answer to doing that is because the audience had moved to YouTube. So we said, okay, if audience is in YouTube, we should build something on. That is a hindsight vision. That time it was just that this is not exciting. Let's go do what is exciting. So we didn't have a business plan when we started. We had nothing of that sort. That's how we kind of came to be there. From there to Chatterbox, where okay, there was a thought, there was a plan, etc. To Dundee, my third venture, where it was built. I mean, me and Anish literally thrashed out every single point of what all could we do, what all could we build, what are the what kind of revenues could we be chasing and stuff like that. So we kind of had a far better structure in place there. So yeah, if you ask me, between every venture has been different. This
Yeah.
one maybe far more mature as a founder.
Yeah.
I don't know if that's a good thing or a bad thing.
Yeah, but I'd love to ask you because you said accidental entrepreneur. You did mention that while you were in Glitch, it's a creative field,
Yeah.
and when you were with Chatterbox, it was a technology platform, and you've been a creative person
Yeah.
all your life, right? Because building Glitch, it was all about brand strategy, ideation, creativity at its best.
Yeah.
So, what was the thought process? What mind shift did you have to make? Because from a creative, being from a creative field to going to a business, which is all about balance sheet and numbers and investors and
Yeah.
all of that, what sort of mind shift did you have to make? You know, while you were then
I mean,
building
it's
this
interesting you ask
company.
this question because so I studied to be a filmmaker. So I did engineering, did study to be a filmmaker, and then went to advertising, right? And when we built Glitch as an advertising agency, I have never worked in advertising in my entire life when
Yeah.
we built it. When we started Chatterbox in the creator tech this thing, I have never worked with talent management or technology companies in my, this thing. So when we started Dundee, which is a investment bank 2.0, I don't think I have any experience there. But my learnings every time has been that for me, it has always been that I'm an outsider in perspective. So I'm coming to solve a problem and I'm coming as an outsider to solve a problem. And maybe sometimes the outsider has a different take on a problem. So when we started Glitch, we were the outsiders, Varun and I. We never ran an agency, but we knew what is it. It's end of the day, you are hiring an agency because you want to market your thing. So how do we build marketing? We do what works there. So we, for example, had built video at the center of what we did, right? Not the norm in 2009, became the norm by 2016. We were pioneers. We are the first ones to move. We are the biggest advantage there. If I look at Dundee today from that point of view, banking, I don't know how bankers work. I have never studied investment banking in my life, right? So I don't even know. I still don't know how to work Excel sheets with pivot tables. My team's far smarter than I am. So
Yeah.
always hire somebody smarter as one core part of it. But
Yeah.
what I see is I see the problem, right? What was banking trying to solve, and what is the problem there are startups who need help to scale. There are buyers who need startups to buy. How can we get them together? Is the thing. Now, what tools will it take to get them there, etc., is where we will come into play, and or is there a better solution to the existing problem or the existing way of doing it in this new wave of technology? And that's where we are bringing the outside in approach. So which is why like things like, do I spend 3 months working and building a pitch deck? Is that for the startup who's looking to sell a 5 and 10 crore or 20 crore revenue startup? Do I need to spend 3 months doing that? No, I
Yeah.
don't need to. I need to introduce him to the right potential buyers, and it's a conversation between the two that will lead to it,
Yeah.
and not necessarily that fancy pitch deck. So I have been able to look at it from that problem point and say that we remove that. So
Right.
these are the kind of, I feel that being an outsider is an advantage, but what I really grateful for and helpful is the fact that I have two co-founders who are probably one of them who's properly in the system, who knows the rules. So he's like, okay, you're trying to break it or you're trying to bend the rule, which does this thing. It gives me that safeguarded cushion saying that, okay, if you fall, I'm there as a parachute.
Right. So that helps complementing
Yes.
capabilities. And what was tougher? Was it building Glitch, Chatterbox, or running your current startup, Dundee?
I mean, every startup's got its own journey. See, that's what I said. I think I've had startups in different phases of my life. Glitch, young 20-year-olds starting something, right? You have zero responsibilities. There's no, I mean, you're gunslingers, as we call it. We were out there. We started with an intent of saying, ki, kuch nahi hoga, we'll go find a job. That was the thing. So opportunity costs, etc., much, much lower. Appetite for risk is much, much higher there. As you grow older, so today, for example, like when we start to Dundee, like I'm in my 40s now, right? So and then I look at it, it's there is a, I mean I have to keep reminding myself that remove the fear of failure. It's okay
To
to
fail, yeah.
fail. So those kind of questions come into play. You are used to moving. I mean, like imagine you've come from both Anish, me, etc. We've reached a certain stage in our careers. So now to come back to startup, which is the 0 to 1 journey, is a very different journey, right? So,
Yeah.
and that grind, suddenly you're like you have to get your hands dirty, and you have to be willing to get your hands dirty. Like
Right.
there is no EA booking your flight ticket either now. So it's
Right.
the game changes on that front. So
Yeah.
that's a curve, and the energy you have at a 20-year-old and as
Very
a 40 year
different.
old is very different. So this every stage has been a different
Interesting.
journey for me in that.
Yeah, and I think I couldn't agree more on that. What
Yeah.
we were 20 years back, and when I also talk to a lot of startup founders, I think this is a common thing that I get to listen to, right?
Yeah.
About the energy
Absolutely.
and everything that you said right now. What about the leadership style? How does that? How was your leadership style back then to compared to your first startup, and how is it now? Has anything changed?
I mean, you should probably ask my team about this. I don't know if it's. Uh, I think when we started, so again, it's so different. Like a glitch, right? Similar age group almost when we started. Everybody who joined us was in that similar age group, and it was think of us like a college hostel frat party. That's how we started. It started in the living room of our house, right? So and
Yeah.
then we were all like working together,
Yeah.
drinking together, eating together. All of that was
Yeah.
the space. As you grow, it changes. From a leadership style point of view, I've personally my leadership style innately has been hands off. Like my thing is hire the smartest person to do this job. If you hired that person, and this comes from a lesson my dad told me a long time ago. I remember this because when we were building a house in back home, and we'd hired an interior designer or architect, and then when we were sitting down, me and my mom were trying to explain, like saying, okay, so we want 3 bedrooms and one here, and then my dad turned around and said, you've hired a designer. If you're going to tell them what you need to do, then they are an executor. Let them tell us because they are the experts in the field. So that has always stayed with me, saying that when you
Yeah.
hire somebody, just let them run with it.
Yeah.
So at Glitch, the advantage was there were a lot of young kids who were there. So the point was that throw them at the deep end of the pool. If they need rescuing, you will jump. You're there. So, but that gave us the sharpest people. So you would throw young people into like the deepest
The
of
sea.
problems. Some of them who just rose went on to become very, very high up senior leaders across the spectrum. Today, when we are at Dundee, I think we're attempting the same thing. We've got people who are smarter, definitely is the thing. And throwing them at the deep end, so they are every year at the end of the appraisal cycle, they need to be
Yeah.
much, much higher than their peers. So that's the thing that we've gone with. So
Awesome. Amazing. And what is the toughest decision you've made as a founder?
probably to sell your company.
That was the
I mean, it's
toughest.
funny to say that I run a company that helps people sell companies, but it is it's not a very easy thing to let go of, to kind of align yourself to that fact, right? So
Yeah.
it becomes an identity for you for the
Yeah.
like Glitch for us 2009 to 2016 when we Varun and me were just eating and breathing Glitch, right? So
And
we
you had
were
no plans to sell off those companies. So
no,
what
we
pushed
didn't
you?
know that
Yeah,
acquisition was an option either,
correct.
right?
Yeah.
We were building because we enjoyed what we did, and that's what we were building for.
So what was the trigger that pushed you to sell both the
We
companies?
first got an offer. Somebody came knocking and said that, hey, this is a thing. That's when we said, oh, wow, there is an exit as an option. Then bankers came on board and said, hey, it's not just this, there are more people interested. And suddenly we got multiple. Then that's when we started evaluating and drawing out. So I remember Varun, Pooja, and me sitting there saying that, okay, what does an acquisition get us? And what will it take us to go to that position without an acquisition, right? One thing that acquisition does give us is a great comfort of it's a comfort cushion
Yeah.
like
So was
cash.
the monetary value the
I will
only
not
thing?
deny the fact that money plays a role for sure in this, right? I mean, suddenly it's a safer bet, no? Like
Yeah.
for all the work that you've done, it gives you a cushion, and then it gives you the launch pad to
Yeah.
scale to a different to take the company to a level. Do I see? Did I see myself running that company for the rest of my life? I don't know. I did, and I also realized that I mean, different people have different styles. I love 0 to 1 journeys. I enjoy a 1 to 10 journey. After a 10, then I'm like, so this taking a company to IPO is not, I mean, it's more about holding on to a structure, etc. I'm more I really like the first
The
half of the
startup
journey,
phase,
yeah, than the other half of the journey.
actually getting your hands dirty and
Exactly.
doing
So,
stuff.
which is why I wouldn't be the right. So, even like, for example, in Glitch, both Varun and I were not CEOs, right? So, Pooja came on board as a CEO because we knew that I don't know if we are the right ones to structure it. So, we got this thing. So, we are also very clear from that point of view. Even Chatterbox is filed for IPO. It has gone to that point. I mean, it's a great pride moment to say that it's gone. Could I have taken it to IPO? No, I don't think so. I'm not the right person.
Right.
Again, there I had find the right people who can take it from the right
Yeah.
spaces is where I would.
And while you were selling off the companies back then with Glitch and Chatterbox, what was your negotiation style to get the right valuation for the company?
I think we both places we operated from a point of no fear, right? And also the reason why we could do that is because we were both in both companies when we got the offers, we were doing very very well. We were so it was almost so suddenly when you operate from no fear, saying that look, I don't need you with or without you, I will with you I'll get there maybe faster but without you also, I will. It's not like I'm going to. That just gave you a lot more confidence when it comes to negotiating.
Amazing.
Which is why I keep telling founders today that when is the right time to sell your company is when you're not looking to sell. Right? You don't know because a lot of people when I talk to them, they're like, I'm not looking to sell right now because you could be in your growing stage. Greatest time because you will get a much better
Yeah.
value. You could continue to work with that company and extract more value, but that's a thing. So
Yeah. And what is that one personal trait that helps you, say, handle a high pressure deal when you're doing the deal, especially when you're looking at a M&A? What is that one trait? One is no fear, of course, you mentioned. Is there any other mindset that you would advise founders to have while they are negotiating to get the best price for their startup?
See, you can do whatever science you need to do for understanding valuation. There will always be a price you want, and there will always be a price somebody is willing to pay. Right? You have my job as a done deal right now is to kind of bridge that gap to
Yeah.
bring, but to help you understand your pricing, to know what you're worth or whatever,
Yeah.
you have to also see what. Sometimes all the founders need a little bit of a reality check, right? And I will be in that same shoe. So at Glitch also, I looked at it and saying that, but I think we should be worth this much. Then if you're telling me you are worth this much, you have to be able to justify that price because let's look at it. If I am paying money to buy a certain thing from you, I'm not doing charity. I have to buy this and then be able to extract that same amount of value quick. in the quickest form. So our advice to founders is always that it's great to have a very high expectation, but then have a science or a justification to why it is. So if you're saying that, hey, look, I need 100 crores for my company, it should be the fact that the guy who's buying it should know that, okay, I'll pay you 100 crores, I'll buy it. And in the next 3 years, I'll recover the 100, and after that, I'll start making insane amount of money. So you show me the justification. So be very clear on that front when you're this thing. So when you're negotiating, the minute you are very clear about where the business will go. So if I turn to you and say that you pay me 100 crores, or you know what, I'll make the 100 crores in 3 years anyway. Then I have a path to it. Thing. I am suddenly justifying the price.
Yeah.
So it's all science. It's
Yeah, but I think confidence and also plays a very important role, right? In
your
the
confidence,
negotiations. Yeah.
and your vision will play a role, because you have to tell me that how are you seeing this unlock what it can,
Yeah.
right? And then that's where the thing. And also, I mean, it's like playing poker. Both parties are trying to call your bluff. So you need to know who has what better.
Right.
I mean, if WhatsApp can sell for $19 billion at no revenue, but still we consider it a undervalued deal today. So
I think those are some amazing insights. And let's talk a little bit about mistakes. What are some of the mistakes you feel you've made in your past, which you are careful not to repeat today?
I think my biggest learnings over time I've kind of taken is, it's not just about hiring right, it's also about firing right. Right? And I think that's a mistake a lot of founders, first time founders, etc., we take. And in the name of, so at Glitch, I remember this, when somebody was not the right fit for the job, we just thought that maybe by firing them, we will come across as bad founders, and kind of kept them in the ecosystem. My journey so far, have learned that by doing that, you're doing a disservice to the person who's there in that place and to the rest of the team. Because imagine there's a bad apple there who's not performing, and the others are working 4 times as much because this person is not performing. But yet you retain this person. They're like, hey, so technically I don't need to work so hard to get there. And this person is like, you are not performing because you are not enjoying this role. So, but I keep continuing to give you a chance to be in this role, but you are meant for something else.
Yeah.
And it took us a while to get to that understanding, right? So because in the name of, I mean, not trying to be termed as a bad founder or anything of that sort, or in the name of culture, we've kept around to later realize that was where we were going. Like, that is a mistake that you're making to your own team. The day we corrected that, saying that, hey, look, if you're not the right person, you must be a great human being, you can be a great friend, you're not the right person for this job. Be open about it and let them know early, nip it in the bud.
Right. No, very interesting. I think that's a great, way to look at it. I mean, about hiring and firing. That's a great insight. Tell me, what is one non-negotiable for you in your life as a founder?
One non-negotiable?
Yeah.
You're saying one non-negotiable
For
for me?
as a founder, yes. Something that is absolutely not in sync with your values, your value system, or something you're not okay with. Just
No, I think honesty and all this is, I mean, I think that is something that you should take for granted. So, like, I will operate from trust. I will trust you inside out. It is for you to break my trust, right? But then I will not stay, and same way I expect you to do the same in return. So being all of that, I mean, as cliched as it sounds, I think being honest to yourself and being honest to your shareholders and your employees, etc., is the best thing to do. If we've seen instances where being honest to people helps so much more. Like, there was a point at Glitch where, for whatever few things that we'd done, there were some cash flow issues. We didn't have the money to pay. Now, what do we do at that point of time for that particular month? We called the whole team together and said, we need a little more time. We fucked up. And I was okay to say, we both, like Varun and I were okay to stand there and very openly admit to going wrong and being honest about it with them.
Yeah.
It and we saw that shift, and that day is still very clearly etched. We never wanted that day to ever happen again. But then that day, every single employee sitting there stood there and said, "It's fine, we're here with you," and they fought that battle with us, and that was a great thing. So being I could have made any excuse or whatever on that front, but being honest sometimes is the best. So that is a non-negotiable for sure.
Amazing. And when it comes to the startup environment, what is your prediction for startups in India, say in the next 5 years, um, in terms of valuations, in terms of investing? Where is the future for the startup ecosystem in India?
I mean, we're a country which is a TAM in like a huge TAM in itself. There are enough and more problems to be solved. And I think there are the smartest people solving this. So I can only see this coming up. My advice is don't, it's not a shiny toy, right? To be an entrepreneur or to have your own startup, it sounds very exciting. It is a very grueling journey. But if you find the right problem, then definitely try your hand at solving it. But it's not everybody has to be a founder. The problem is it's sometimes, we have these phases where Bollywood also spoils us, right? Earlier, advertising was this. Anybody in advertising was looked at as cool in this. And
Yeah.
then bankers were looked at as cool. Then entrepreneurs. I'm like, don't go by this thing. If you see a genuine problem and if you think you're the right one to fill it, you should definitely solve it. There are enough problems to be solved. But don't do it for the sake of doing it because don't be a me too in this ecosystem
Yeah.
because that's not going to take you.
Right. And what do you think is going to kill more startups in India? Is it going to be lack of funding, lack of exits, or maybe something else altogether?
I don't think, again, lack of funding will not kill us. A good startup will come up without funding also. We've seen the best bootstrap companies in this thing. And when you're hungry, you will find a solution, right? And so I don't think funding will kill a startup. I think I'll quote Ashish all the way.
Yeah.
And it's going to be obesity. Just uh, this chasing of vanity metrics, like
Yeah.
wanting to and see that, oh, that is how I will be. This thing
Yeah.
is where like you don't need to be advertising in IPL
Yeah.
and this thing for you to do this. So
Yeah. If you had to invest, say, 5 lakhs in a startup today, which category would you pick?
I think today, I think the world order has changed in the last 1 year, right? This whole influx of AI that's come in, it's changed everything. Every single category is getting disrupted across the spectrum. So be it edtech, be it SaaS, etc. So it's see, if I had to, I mean, it's very easy to have turned around and said anything in the AI space, but then if I would go one step in to say somebody who is solving for this, right? So solving for a problem with a new outlook or solution. So I'm still trying hard to think about which category in general. Uh, I I think there's a lot of data that's going to be there, and from our point of view, there's something in the healthcare space. Okay, and anybody's using AI to solve something drastic in the healthcare space because that is a lot. We are a country which is actually has a strong healthcare system, and we have strong amount of data that's sitting there. So somebody who can solve in this is where, I mean, if I had to park, and this is a space I don't know anything about, which is where this is a great place to put money in to get a bird's eye view of things and learn. So
When you're looking at a serious category like M&A, how do you make it so fun, exciting, and relatable to today's current generation on social media?
I think that's what we cut the jargon first up, right? So we have this culture book that we wrote for Dundee saying, what are we? What will we be? And all those lines that we think of as a vision statement, mission. One of the things is very clear that we are bankers, but we are never going to be an intimidating banker, right? So, bankers are intimidating. The first time our own bankers, when we met at
Yeah.
Glitch, right?
Come wearing the suits and
Suits,
stuff.
big conference room, one sitting there, one sitting there. That's not how it technically should. So
Yeah.
we work very like we want to be you. We want to see you succeed, and then we'll help you. So you will never see me in a suit. So that's one. So we are bankers in hoodies, as we call it. So we are almost like talking to you like a startup thing. We get you, we hear your pain, and we'll.
Yeah.
So we cut the jargon. We will not give you unnecessary words that are not needed. We will not. Our job is to simplify things. So simplify our transactions, simplify everything on that front. So even if it's a legal term to be told, we will sit there and explain that easily.
Yeah.
Because we understand that you may not have done this before.
Got
So
it.
that's been helpful.
And any sort of other marketing strategies that have worked for you besides word of mouth, of course, to attract more investors, more buyers, not investors, I would say buyers on your platform?
So it's been largely through our content pieces and stuff that we do more of it is outreach driven, where we turn to an investor who's probably a buyer who's probably never bought before, who's not a buyer, right? We're like, hey, here are 4 other people who in your segment who end up buying. Why you should buy, and here is a company that you should really look at.
So like testimonials would work for you.
Testimonials
Or case
work,
studies, you
case
would say.
studies work, testimonials work, but end of the day it's all bait, right? So the better the company that we have, the higher the chance of you biting. So that's the outlook we generally
Right.
take.
And if you had, say, 50,000 rupees in your pocket today, how would you use that money to market yourself? Where would you really spend that money? Because I understand your CAC is pretty low and everything happens through word of mouth
Yeah.
in your sort of an industry. Is there any new innovative marketing tactic you would look at to
I
spend that
think
money?
see, the thing is, I don't know if it's innovative. I mean, we're a very boring B2B business technically, right? So for us, it's like I said, it's the more you read about us, the more this thing is where it will be. So if 50,000 can get me placed in different spaces where startups are reading, etc. It could be.
That's why you need
seeded
a
art.
PR,
Exactly.
perhaps.
It's exactly where that's probably our only. We'll never hire an agency. If we have to ever hire anything, it will have to be PR driven. So
Yeah.
it will be there. That's
Amazing. And I think since we're just coming to the end of the show, any top 3 lessons that you would want to give our viewers today for startup founders, aspiring founders who are watching this show today? What would those be in terms of business and entrepreneurship?
I mean, that have that will to make mistakes is what I always say, and I will continue to say this more and more, because don't be afraid. See, make something new. That's what a founders go for, right? So try something new, and you will only try something new if you take that fear of failing off, because otherwise you will start copying something that exists or making something. So that's one definite piece that I keep harping on. And whatever you do it fast, right? So I mean, my advice probably is always from a 0 to 1 point of view. It's like you have a limited amount of limited amount of time to spend. So try all kinds of things, okay? But be open to admitting that, okay, this has not worked. It's failed.
And pivot quickly.
Yeah, and quickly find is there another solution, and take ego out of the equation. As a founder, you have to take ego out of your equation, because that ego can sometimes tell you that, oh, how can I have failed? And no, that can't be or how could somebody else have a better idea? No, if somebody else has a better idea, just admit it and take it and run.
Amazing.
So,
Awesome. Thank you so much for
Thank you.
being on the show.
This was
This
a
was
pleasure.
such an insightful discussion. And I think your insights will be very valuable for our viewers who are watching this show today, who could be startup founders, aspiring founders, entrepreneurs, or even college students who want to probably start their own ventures or businesses someday. So thank you for being so candid with us.
Thank you for having me.
Thanks a lot.
Pleasure.
Thank you.